Hey guys, welcome back to another update of my Canadian dividend investing portfolio series. So right now we're looking at a stock value in my portfolio of around $65,800, give or take. At the moment we're up about 4,600, which means we're looking at about 7.46% all-time gain. Last week we were sitting about 10%, so I'll show you what happened here. We lost quite a big chunk in one position, but basically still everything is looking good overall. We're in the green. In this video, I'm just going to go through some of the stocks that I'm going to buy today, talk about them, and then at the end discuss like how my annual dividend income is going to increase based on the money that I spent today, which I have around almost $700 ready to go. So when we're looking at the portfolio here, we can take a look at some of the positions which I have sorted by biggest percent of holding at the moment, and you can see here this is the trouble one. Just in the last week, they just really tanked. They dropped off like 20%. And for me, because this is one of my biggest positions, I lost nearly $1,000 there, but I'm not going to panic. I'm just going to hold on and ride this out and see where it goes and collect my dividend along the way and not panic sell and just actually lock in that $1,000 loss. But when I'm looking to buy some new shares today, I have been looking into Waste Connections. If we take a look at their Sparkline, they're just always experiencing pretty nice growth, and every time they pull back a little bit, I always try to buy these dips, and they have pulled back a little bit, and so I'm going to jump in here while I can. Another one that I was looking at is Pizza. These guys are one of my strong dividend paying stocks right here. They have a very high yield of over 5%, and I'm pulling in around $100 a year from them, and I'd like to get that up a little bit higher, maybe past 144, so I can, pretty much buy a new share each month with the dividends that they receive, essentially doing like a self-guided drip. So I will be adding a little bit into this because I would like to get there. Another one that I was looking at here is Aecon Group. They are also pulling back a little bit, but I want to jump in because overall they are climbing over time. When we look at their max chart here, and they dropped down pretty hard and they often rebound. So I'm hoping that this pattern continues and can get in on a little bit of a swing trade with these guys. Another one that I was looking at is EIF. We can take a look at their Sparkline here. They've had some big swings in the past, and they've been up near their all-time highs just very recently. But these guys are also paying monthly with pretty nice dividend of also something over 5%, which I just like to, get that cash flow coming in too. And then I think the last, if there's any money left in my account, I'll be putting it into Savaria, which is also just recently coming down from its all-time high. And not entirely sure where this one's going to go, but I'm down about 4% on this position. And so I think for now, it's a good time to be averaging down on my price, my average cost with this business. So yeah, let's jump into Wealthsimple Trade and buy the stocks that we were looking at. So let's get started with Waste Connections. Again, these guys are quite expensive. Their price is $166. So I just want to be taking one of them. So we'll take that and confirm that order in my tax-free savings account. Okay, cool. The next one that we were looking at is Pizza. That is PZA. Now you got to be careful here. It's this one on the Toronto Stock Exchange. And with these guys, I want to put in around $100. So we're going to take, I think, 8 shares. Yeah, I think that'll be good enough. And again, this is going into the tax-free savings account as well. Confirm this, and then we're going to move on to Aecon, which is ARE. There we go. With these guys, I also want to put in around $100, I think. So we're going to take, I think, probably like 5 shares. Yeah, I think that's going to be good enough. I'll just take 5. Actually, you know what? Cancel. I'm going to take 6 of these. That's going to put us right around 100. Take 6 in the tax-free savings account. Okay, cool. The next one here that we're looking at was EIF, Exchange Income Corporation. These guys are a bit more expensive as well. So I'm going to take 3. That'll be a little bit more than 100, but I think that's fine. Buying into this company. Sweet. Again, always in the tax-free savings account. I'm approaching my limit. I think I'll probably reach it like by the end of 2022 or something like that. In which after that, I might look into using a different account. But for now, I think for me personally, putting everything into the tax-free savings account is making the most sense. All right, so we've got a little bit left here, 183. Exchange Income Corporation, the whole account. And I did say I wanted to put a little bit into Savaria. So let's go ahead with that. And I don't think I want to put in all 183, but maybe I'll put in 100. So we'll put in 6 shares. That should be good enough to confirm the order. And there we go. There is a little bit of cash left in the account, but I think really at this moment, I'm just going to leave it. And I might come back in later in the week and just spend that if I find, if there's a nice deal or something. But yeah, so now what I do is I just come into the activity tab, and I want to capture all of these numbers and transfer them into the spreadsheet. So basically I'll record exactly the number of shares and the price paid per share, and we're going to bring that into this spreadsheet. So I'm going to go into the transactions tab, scroll down all the way to the bottom, and basically this is just one big master list of all of the transactions that I've ever done. And then, like I said, I'm just going to drop in the date, the exact quantity, and stock price, and make sure that all of the totals over on the right all add up to the exact totals that were displayed in Wealthsimple. And once I'm satisfied with that, then we're good to go. So we can jump back into the portfolio tab if we want and reorganize this to see if any of them move. A little bit has shifted around there because now I've added more into these positions and they're making up different percentages of the portfolio. But mainly I'm looking here at the summary tab, looking to see how much my annual dividend income has increased. And if you remember at the beginning of the video, we were sitting at around $2,618. And now we're looking at $2,639. So that's an increase of about $21 per year. And because this is my tax-free savings account, this is pure tax-free passive income that is pretty much only going to grow with time as these companies naturally increase their dividends, usually like in association with their stock price increasing. And also as I take this money and reinvest it and buy more dividends, more dividend paying stocks, which is also going to increase the amount of dividends that I'm receiving. And again, I'm just depositing more of my own money in all the time and just really trying to grow this number as much as possible. And it's working pretty well. So now we're looking at, that works out to be about $220 per month. Now I'm not getting that exactly. This is just literally the cell divided by 12, but that's the average. And every third month, basically once every quarter, we're usually seeing a big spike, and then the two following it are a little bit small. So we have a big one, then two smalls, a big one, two smalls, a big one, two smalls, but they average out to be about this. And so I'm expecting January to be one of my big months, and so we'll probably be over $220, but we'll see by the end of the month exactly how much comes in. So anyways, guys, if you watched this far, if you like this stuff, thank you very much, and make sure you leave a comment down below. Let me know what stocks you're buying, and if you also held HR real estate and got slammed by them this week as well. Alright guys, take it easy, and I'll see you down in the comments.